Hi everyone, Happy New Year and welcome back to our investment updates. We're going to chat today about what happened last quarter and also have a quick look at what happened overall in 2025. So Mash, what happened in the last quarter then in markets?
Hi, Charlotte. So it was another strong quarter for markets. Overall, we saw positive returns from sort of all of the major indices, and actually, for a change, we saw the US at the lower end. We saw a lot of movement out from Japan, and then a really strong quarter from the UK as well. So generally pretty good. Obviously, a little bit of volatility and uncertainty, which is sort of in keeping with the rest of the year, but overall, pretty happy.
Okay. So how about for the year then, if we want to have a look back over 2025 as an overview?
So 2025 had a bit of everything, really. We had periods of sort of really calm and quiet markets. We had a lot of uncertainty, and then we had a lot of, some periods of serious market volatility as well. So markets were really well tested throughout 2025. We saw the political uncertainty was probably the highest that we've seen in quite a long time. With Donald Trump coming out with the tariffs in April, really tested markets and made investment managers sort of everywhere really have to try and work hard to keep those portfolios well balanced. So a lot of sort of challenging scenarios. We saw gold hit an all-time high. We saw sort of the dollar move around much more than we're used to. And generally, sort of volatility and uncertainty is what were the sort of main two areas in 2025. So it was obviously quite a difficult period from our side of the fence. How did clients feel?
Well, and interestingly, actually, we've just done our most recent annual client survey, and it's probably one of my favorite things that I do because you get a really vast amount of information from clients about how they're feeling. And I was particularly looking through to see how they're feeling about markets, how they're feeling about their investments. And overwhelmingly, the messages throughout the survey really were that they understand that it's been a really challenging time globally, but they actually feel confident in the decisions that we've made. They feel like they're in safe hands, and just knowing that we're overseeing that, they feel that they ended the year in a good place, which is really good. I did have one quote that I thought was really, really good, which was a steady hand on the rudder of our financial boat through the sometimes turbulent waters, which I thought was pretty apt for last year. So thinking about the year ahead then, 2026, what are your thoughts on what's coming?
Yeah, so just again touching on 25, I think our investment managers did a really good job at managing those difficult markets. I think it's something that Europe, for example, and EM played a much bigger part in global returns last year than perhaps we've been used to over the past few years. So I think that's going to continue is maintaining that forward-looking view on areas that perhaps aren't just focused on the US. That being said, we do think that the general US dominance on growth is going to remain the same. That sort of general consumer sentiment and the sort of focus on technology and AI, we don't see that going anywhere in the near future.
Well,
Um,
that's actually a really interesting point because we touched on AI and the so-called AI bubble last quarter. Nothing really seems to have happened with that. What's your
no,
thoughts?
yeah, you're right. I think things have calmed down a little bit since then. Actually, I think that general hype has calmed down. I think it's that euphoria from new releases. You've got the likes of Sora coming out, etc., and that just gets consumers and investors really excited, and that sort of inflates those prices a little bit. It hasn't come crashing down or anything like that. I wouldn't say that there's been a bubble that's burst. It's just again at that scenario where we're thinking valuations are high, it's expensive, but the general long-term view is still pretty positive. So cautiously optimistic is how we will sort of remain, and that's how the majority of our investment partners sort of take a view on that. So moving away from the US, or I suppose actually political uncertainty was a big factor last year, and clearly is going to be the same thing in 26. With what we see between the US and Venezuela, and so all the other global conflicts that are going on around the world, that's going to remain a focus. At the moment, the impact is quite limited. It's pretty much only impacting oil, so very little effect on sort of a well-diversified portfolio. But it's really important that managers actually have a good grasp on this and understand what could potentially happen. And then the sort of final point that I'd say is that we're looking at is potentially a bit of divergence between growth. You've got last year we saw everyone doing extremely well. We saw The US actually had the lowest returns, and they were just over 9.5%. Everywhere else getting comfortably into double digits. Next year, we're thinking, the UK, despite hitting 10,000 in the FTSE the other day, we think that actually that there's signs that we may see a little bit of a slowdown in UK growth, whereas Eurozone is looking like we're going to see a good uptick. So I think being positioned in a way to see different market conditions from different areas of the globe is going to play a much bigger part. And I suppose that just our message really is exactly the same as it has been for a while. It's maintain a well-diversified portfolio, keep it geographically diverse as well, have a good level of active management on a strategy, and maintain that long-term view.
That's great. Thanks, Mash. So to sum up, our message remains the same in 2026: well-diversified portfolio, and keeping a long-term view on your investments. Thanks for listening.